Co-ownership. So today we're going to talk about co-ownership and why this is a big strategy a lot of Canadians are using to get into the market. And why are Canadians using this to get into the market versus just buying a home on their own? So I'll get into all that and I'll talk about some success stories and some strategies that Canadians can use to get into the market today using this co-ownership structure. One of the reasons why I'm going to be talking about this is because if you're a Canadian, for example, if you're a single Canadian that is working on a single income and you're supporting a family or you're on your own and you have money to buy a home and you want to buy a home today because you've saved up your pennies and you have, say, $50,000 in the bank and you're making, say, $60,000 a year as an annual income, to buy a home on your own, you can just forget about it. You can't do it with interest rates the way they are and with the rules with Canadian mortgages. There's just no way you're ever going to get approved for a home, even if you have $50,000 in the bank, even if you have the greatest credit, even if you have the ability to save more money. You're just not going to get into the housing market today on your own. So that's why co-ownership is a ownership structure which is gaining popularity and is really the way to go for a lot of Canadians right now, especially in markets like Southern Ontario, like Toronto, Barrie, Kitchener, Waterloo, Hamilton, London, Ottawa, everything in between. You just can't get in the market on your own if you're buying a home. I remember 10 years ago, this was starting to get really difficult. I had Canadians that would come to me to get a mortgage. They had the down payment saved. They had fantastic credit. And already I was seeing a decline in affordability. These Canadians were limited to the cheapest and most affordable homes out there. And now that we've had immigration, there's 500,000 people coming into Canada every year. There's people that always have money that are coming in to Canada with, and they have the funds to buy a home. And these people are now competing against the single Canadian. So these are Canadians that have down payments saved up, credit score sometimes in the 800s. Like, that's a really high credit score, no debts, and they can't even buy a home on their own. So what is co-ownership? Well, co-ownership is a way of buying a home where it's not only you on the mortgage and title, it's actually you and someone else on the title. So it can be you and a friend. It can be you and a family member. It can be you and, a coworker, or it could be you and another company, for example. And I'll get into that a little bit later in my podcast. So these are different co-ownership structures that exist. And these are ways that you can actually get in the market. All right, so I'm starting a poll here on my TikTok account. If you are just joining me today, I have a TikTok account as well. You can follow me at Canadian Mortgage Weekly. So co-ownership is the way to get into a home because, like I'm saying, if you're just joining me now, to get into a home today and to buy a home on your own, if you're making $50,000, $60,000 a year, if you have a down payment saved up or $50,000 or $60,000, and you want to buy a home on your own, you can just forget about it. There's nothing available in your price range. Nowhere in Ontario you can buy a home. You might be able to find something in Winnipeg. And why am I singling out Winnipeg? Winnipeg is one of the lowest priced markets right now, and probably you can get something there. But if you're buying a home on your own, you really can't do that in Ontario. Forget about it. Don't even call your bank. Don't even call your mortgage broker. You're going to waste your own time. You're going to waste their time, and you're just going to end up disappointed. So whether you're a single person that has just graduated from school and you have a great job and you have a down payment you've been saving for years, you can just forget about it. So one of the ways that you can get into co-ownership, and it's actually an article here that I'll cover off in Canadian Mortgage Trends. It's actually a growing way to get into a home. And this is completely driven by this lack of affordability that I'm talking about. That people that have the means to buy a home, they just can't get into the market on their own. You may have some extra income coming in from Canada Child Benefit. Maybe you have an extra $1,000 a month. Maybe you have some income coming in from spousal support as well. Maybe you've been recently separated and you're on your own and you want to buy a home. Well, forget about it. You're going to be wasting your time. So there are some examples here. One of the examples here is two brothers that bought a home together. Because really, at the end of the day, we need at least two incomes to buy a home in Canada. And a lot of this is driven by the fact that Canadians now, even if you're a single Canadian buying a home, you're competing against the Canadians that are buying a home that have two incomes, three incomes, four incomes, five incomes. I've seen six incomes pretty frequently now to be able to buy a home. And the reason why I'm seeing this is because we're seeing a lot of Canadians, new Canadians, for example, they're coming into the country, they're getting their permanent resident status, whether they're coming in from Ukraine or India or Vietnam, anywhere. I've seen it all, but it's a whole family that comes in from into Canada, and they are all working. We have mom and dad working. We have son and daughter working. We have grandma and grandpa working. And maybe they're all minimum wage jobs, but even those you can make good money. Six incomes at minimum wage brings in about $180,000 a year. And if you're making $180,000 a year and you have zero debt, you can afford the average price home in Canada. So six incomes, it takes six incomes to afford the average priced home in Canada right now. That would be six minimum wage incomes. So we're seeing a lot of single Canadians now compete against these families of five or six that are coming to Canada. They have the means to buy a home with the down payment. They all get jobs and they buy a home right away. So those people are going to outbid anyone that's buying a home on their own. So there's a tale here of two brothers. They were each earning $70,000 a year, and they ended up buying a condo with a 10% down payment, and they each put in $30,000. So that's one way you can get into the market, by doing a co-ownership structure and being able to buy a home together with other people on title with you to be able to get into that home. And what do people do when they get into that home? How do they live together? How do they combine that living arrangement? Well, a lot of time what they'll do is they'll share the living arrangements. Maybe they'll buy a duplex that has two separate units already built into that home, and one family or person will take up one unit, and then the other family or person will take up the other unit, and they will co-own that building together. Other ways you can do that is if you have three different individuals that come together, or families, and they buy a triplex. So in a triplex, you have three separate units, three apartments in one home. A lot of the times you have the top floor is one apartment, the middle floor is another apartment, and then the basement or first floor is a third apartment. And they all go on title together, and they all live in the home together, and they're all contributing to that one mortgage, right? And then when they are all doing that, instead of paying rent that goes out the window, they are actually building equity in that home. And as they are building equity, they're paying down that mortgage. And as they live in that property, they're maintaining that property, improving that property. raising its value. And then that difference of the value versus the mortgage is the equity. And as that equity increases, each person that has bought into that co-ownership structure will then have their share increase. So when they sell altogether, they can get their money back out plus whatever the property is appreciated. And a lot of the different ways that this is done, because a lot of people ask me, Joe, how do I know I will have my down payment safe? How will I be able to make sure that I keep my share versus my sister's or brother's share? In this example that I used, it's two brothers that both earn $70,000 a year, and they bought a condo together. They put in $30,000 each. So in a situation like that, where you're putting in 50-50 down payment, it would make sense to have a ownership structure put together where each person owns 50% of that home, right? If you're just joining me here today, either on TikTok, Instagram, LinkedIn, Facebook, X, or what's the other one? My Facebook page there. I'm talking about co-ownership structures and why that is a huge popular way that people are getting into the housing market right now. And if you're getting into the housing market right now and you're a single person and you want to buy a home, even if you have your down payment saved, even if you have a great credit score, you can just forget about getting into a home today because you're just going to waste your own time. So I'm doing a poll here on my TikTok channel. It's Canadian Mortgage Weekly on TikTok, so you can find me there. So what happens if there's three people that go in together on the home ownership structure? Well, a lot of the times what these three people will do is maybe they won't have the same down payment that they're putting in, but say they each put in $20,000 for a total of $60,000, then each person owns 1/3 of that property. And a lot of the times, Arthur Salty, I hope I said your name right. Thanks for saying hi. A lot of the times that people will get into something like this, they'll actually get the lawyer that they're dealing with, that they're using to close the mortgage and close the home, to actually draft up what's called a joint venture agreement. And when you draft up a joint venture agreement, you're actually able to specify the terms of ownership. A lot of times people also ask me, and make sure you also talk to your lawyer about this, because I'm not a lawyer. I can't give you all the advice, but I can guide you in the direction that you need to go. And one of the reasons why I say that is because a lawyer can really give you the ins and outs of co-ownership as well. But you want to be able to draft that joint venture agreement as well in a way that if one family, say if you want to get out of that property and get your money out of that property, what happens to the other person? What options do they have? Say you're buying a home with your brother, or you're buying a home with your sister, or you're buying a home with your coworker, or you're buying a home with someone else. You want to be able to feel secure in, how am I going to get my money out of this home and buy another home? How am I going to be able to get my name off that mortgage if that ever needs to come to that point? And by drafting up a joint venture agreement, you can indicate clauses in there on how you can actually enact those sale clauses or exit clauses and all that. And once you have that all written in writing, then there's no gray areas. A lot of the times also we put, the lawyer will put maintenance clauses in there. Who's responsible for maintenance? How is maintenance handled in a situation like that as well? So some ways to get out of a contract, for example, say you and your coworker have bought a home, and I've seen that before, or maybe a cousin. Say you and your coworker bought a home, and your coworker then wants out because they want to move on. Their family's getting bigger, and you don't want to move on. You want to stay in that home. You're not ready to move. Well, there can be stipulations in that joint venture agreement that you put together with your lawyer that will essentially give you an exit out of that contract or your coworker out of that contract. There are things called shotgun clauses or exit clauses that your lawyer can explain to you. But what typically ends up happening is if one person wants out and the other party wants to stay in, then the party that stays in, quite often we can, as a mortgage broker, use the accumulated equity that the person that is staying, use that accumulated equity to buy out the existing partner. And that way, a lot of times, you don't even have to put any of your own money into it because you're using your additional equity to buy out that person. And then they get a check and go on their way, and then we put the mortgage in your name alone. So that's a great way to get into a home ownership structure and be able to also make sure that you're safe and make sure that your investment is kept safe and make sure that not only do you have a place to live that you own, but should the other person, your coworker, your cousin, or your sister, or your brother want out, that you have a method of doing so with the lawyer. So if you're just joining me here today, I'm talking about why co-ownership is on the rise in Canada and why if you are a single person in Canada wanting to buy your own home on your own, then you can just forget about it and don't waste your time because it's not going to happen. There was another article that I was actually featured in the Toronto Star that talked about a co-ownership structure that I had put together in Hamilton, Ontario. And it was a very simple structure where two cousins and a friend in their 30s couldn't buy a home on their own. They tried through brokers and banks and were declined everywhere, even though they had great credit and great income, right? So each person on their own had money saved. Each person on their own had a ability to buy a home, but it was just the budget was really small. So how did they do it? Well, they came together, they pooled their resources, and they pooled their income and applied for a mortgage together. So that's a big deal because when the bank sees that, they see the total income on that application, and they also see the fact that the down payment is now a little bit larger and stronger because everyone is pooling their resources together. And they ended up buying a home in Hamilton, Ontario, a detached home, not a condo, and not a townhome or a row house of any kind. Okay, thanks for asking me. Do I own? I do own a home myself. How about you? Thanks for saying hi, Mike. This is on TikTok. And if you're just joining me here, we're talking about co-ownership structures. And I've actually been in a co-ownership structure myself. I've been in co-ownership structures for investment properties for the purpose of being a landlord. And in those ways, a lot of people get into buying rental properties with co-owners just to be able to split that risk and to be able to get into that market a little bit easier. So if you're just joining me here today, if you're buying a home on your own in Canada and you're a single income earner and you have your money saved for a down payment and you have a great credit score, you can just forget about it right now because it's not going to happen. With rates the way they are at and with housing prices where they are at, it's just wasting everyone's time. And you're just going to be disappointed at the end of the day because whatever amount you get approved for, it's going to be too small anyway to do anything. So if you want to look me up, it's Joe Bladek. I had an article in the Toronto Star that actually speaks to all of this. And they bought, a $500,000 home in Hamilton, Ontario, 3 people together. So it was a really good success story, and none of them could have been able to afford a home on their own. I mean, with interest rates the way they're at, the fixed rates have been falling slightly since October of 2023, but they're still in the 5% ranges, some in the 6, but mostly in the 5. And with everyone that's buying a house right now, qualifying is really difficult because there's a thing called the stress test in Canada. So anyone buying a home right now, if you're getting an interest rate of 5%, you have to qualify for that interest rate plus 2%, which means a qualifying rate of 7%. And to borrow $500,000 at 7%, you need a heck of a lot of income to be able to do that. So anyone that's earning $60,000, $70,000, $90,000, even $100,000, you're just not going to be able to qualify for that type of mortgage. Okay? So if you're looking to buy a home, consider co-ownership with a family member, like a cousin or a sister or a brother, or consider co-ownership with a friend, coworker. I've seen the coworker thing a lot. I had a situation last year where there was a family, husband and wife, and the husband worked with another individual, and they were looking at buying as a three into a home where the husband and wife would live in the upstairs part of the home, and the single individual would put in their share and live in the basement of the home, renovate that home so it had a separate living area, and put in a second kitchen for that separate living area. And as you do that, you're actually increasing the value of that home. And when you go turn around to sell that home or appraise that home, it actually is worth more because it has that second living unit in it that you've put in. And you can do that over time. It doesn't have to be right away, right? So with co-ownership now on the rise in Canada, it's a really big, really interesting way to get into the market and not have to worry about not qualifying for this home or not qualifying for that home. And living in a shared living environment is becoming extremely popular. And this is what people are doing to move on to the next step. For example, if you're just joining me right now, used to be as a single person, you'd buy a starter home. And then from that starter home, you'd upgrade to a bigger home. And then from that bigger home, you would then upgrade to your forever home. So it'd be 3 stages of home ownership. When did I buy? I bought years ago. I'm in my 40s right now, so I'm a little bit older. So I bought like 20 years ago in my 20s, and I started with a co-ownership structure myself. And that was the only way I could get in the market in my 20s. I had a lot of pride. I wanted to do it on my own, but when you're in your 20s, it's really difficult to get into a home on your own. So now the way that people are getting into a home is instead of buying a starter home on their own, there's a step even before that, and that step is co-ownership. You buy a home with someone else. You do that for a few years, you build up some equity, and then from there, you then buy your starter home on your own. And why is this a big deal? Well, if you're just joining me now, we're talking about co-ownership, and there's so much immigration in Canada. And what these families are doing, they're coming over from, say, Ukraine, a family with kids that are adult kids and their parents. So sometimes there's 6 of them, and they are getting a minimum wage job just to get in some income going. And once you have 6 minimum wage jobs, that is an annual income of $180,000 a year. And these families are competing to buy houses, competing against, say, Phil down the street, who has their down payment saved up and has excellent credit and has an annual income of, say, $50,000, $60,000 a year. So they are always going to outbid Phil. Phil will never be able to buy a home on their own, and they can just forget about it because co-ownership is outbidding any single person trying to buy a home in today's real estate market in Canada. So with interest rates not really coming down anytime soon, I mean, we are seeing that rates could probably come down at the end of 2024 or perhaps 2025, but not really before then. And until that happens, qualifying for a mortgage today is going to be extremely difficult. And if you're looking to get a home, you should really get some guidance as to how co-ownership would benefit you. So we've talked about buying with family members. We've talked about cousins, brothers. We've talked about, I'll give you another one. A lot of times, client will come to me and they can't afford something on their own. So a lot of the times they'll get their parents to buy a home with them as a co-signer. That's another way of co-ownership. Parents, though, don't have to move in. They can buy a home on their own with the parents just on the mortgage, and that adds some income to their mortgage as well. But another way outside of getting someone like that is you can actually partner up with a company that does co-ownership as a specialty. And these companies essentially, they buy a home with you. You put in your share of the down payment. The company puts in their share of the down payment. And they have terms and conditions that you as a co-owner would need to follow. And if you end up defaulting on that mortgage, then there's a whole list of terms and conditions that are spelled out in terms of how that is dealt with as well before you even sign anything. So you have an idea of exactly what you're getting into. There is obviously less flexibility always with co-owning with a company of any kind. And the company is going to want to make sure that they are earning their income and their share of the profits when they are investing into the home, because they want to see gains on their investment as well as you. So it's something that I would strongly suggest that you leave as a last resort, because buying with another company will always be less advantageous than, say, buying with a coworker or a brother or a sister, or having your parents co-sign, because you just have much more control over the situation if you're buying with someone that you know. I'm going to start another poll here on my TikTok channel. If you would ever consider co-ownership here, feel free to join me on Canadian Mortgage Weekly on TikTok. Make sure you follow my channel as well, wherever you're watching today, if it's Instagram, Facebook, X, or LinkedIn, or TikTok. So if you're just joining me here today, we talked about brothers buying a home together. They each put in equal amounts of down payment to buy a condo in Toronto. We talked about a friend and two cousins buying a home together in Hamilton, a detached home. We talked about also a situation where if you don't have anyone to co-own with, a coworker or a family member or a friend, then another way you could do this is to actually get into a co-ownership situation with a company. And there are a number of companies that are now popping up across Ontario to get into home ownership and co-ownership. And typically these companies, they have a minimum term that you're committing to, say a 5-year term. And typically these companies are the ones also funding that mortgage for you. So if you default on that mortgage, you're defaulting to them. So there's obviously a lot less control involved versus you getting a mortgage with a friend or a family member and then setting that up under a co-ownership structure with your lawyer. And I always suggest talking to your lawyer to get a joint venture agreement set up. So it spells out an exit clause, it spells out your maintenance clauses and how that's all done, and exactly what happens if maintenance doesn't get followed, and what happens if one person wants out and one person stays in. Or say another one I've seen before is one person wants out, the other person stays in, but they can't buy that person out. Well, a lot of the times the person that wants out can sell their share to another person. And it's important that you put in that joint venture agreement, if that person is going to sell their share of that home to someone else, is it something that this person can have control over? Can they have a say as to who's going to be able to buy that share? I mean, if I was buying a home with my brother, I would want to have a little bit of say as to who my brother could sell his share to. I don't want someone random moving in that I don't want moving in. Or if it's someone that's moving in, I would want to make sure they're financially sound before taking on a mortgage with me, because if they miss a payment with me, then it affects both of our credit scores and both of our future mortgageability. So, if you're just joining me here today, we were talking about co-ownership in Canada, why that is rising in popularity, why it's something that single people that want to buy a house in Canada must consider. Because if you're a single person, if you're a single parent, or on your own and you have a down payment saved up and you have a great income and you have great credit and you want to buy a home, you just can't do it on your own. It's going to be a waste of time. You're going to be extremely disappointed about the whole process, and it's just not going to make any sense in today's market with house prices where they are at and interest rates and where they are at. If you need to get in touch with a mortgage broker, my name is Joe Bladek. I've been in the industry for 14 years. Make sure you follow my channels and reach out to me. If you ever need mortgage advice, I can help you with that. I can be reached at through my social media, or you can call or text me and find that information on my social media pages. Be happy to look into your situation and talk about co-ownership in more detail with you, more than we did on this podcast. And as I was mentioning at all points throughout this podcast, if you are getting into a co-ownership arrangement, make sure you discuss a joint venture agreement with all the different caveats in that with your lawyer that you're using to close your home purchase, because you want to make sure that you're protected and that the other person is protected, and that if you guys have anything that comes up, any scenario, that it's already spelled out and agreed upon before you're getting into a co-ownership structure, so you're not going in blind. So thanks for joining me today on Canadian Mortgage Weekly with Joe Bladek, your host, Canada's weekly mortgage video news podcast. We'll see you next time. And as always, thanks for watching.